Around, so I think we should straight get to our movers and shakers segment, and let's start off with Varinder on Max India. In fact, Max India lists at a euphoric price of around 180 rupees, but immediately the stock hit the lower circuit with pending orders of close to around 70 lakh shares on the NSE as well as the BSE. What should be the fair value though of the stock? Varinder is with us. He's going to take us through those details. Varinder?
Well, just to start with, this is a good business, great company. Hospital, healthcare, will be a theme to play ahead for the next 4-5 years. So no doubt about it. The contention here is only the listing price or the fair value for Max India, what it could be. One thing which I really want to understand is that how the price discovery happens in those 10 or 15 minutes of trade. Because actually, if you just see right now for Max India, there is no price discovery which has happened. The stock opened at 180, I don't know for what reasons, and now is trading down by 5%. As you saw on your screen, 60 to 70 lakh shares are still pending sell orders, for Max India, which clearly tells you that for the next few days, you will see 5% circuit down. For next 10 days, the stock trades in trade-to-trade segment. So clearly, there will be no buying happening in the stock. And the real price discovery will only happen after 10 days when it is moved out of trade-to-trade segment. Now, we have been telling since morning how to, get the fair value of this company, divided into 3 parts. The first one is hospital, the second is insurance, health insurance, and the third one is, of course, Entara, the senior living. If you just see the hospital business, going by what the South African deal happened, in July 2014, the enterprise value for this business comes around 3,650 crores. Max has 47% stake in this firm, which means the enterprise value could be nearly 1,750 crores for this. The business, this is the only business which you have to look ahead, because net revenue of nearly 2,100 crores for FY16, EBIT of 221 crores, margin of 10.5%. So that's the business which is there. Otherwise, both of the businesses are loss-making. So even if you give for health insurance 1 price to book value and Entara no value because it's still in the nascent stage, the fair value comes anywhere between 100 to 110 rupees for this business. So we got to see what happens, whether this stock stops at 100, 110 or maybe 120, whatever price, in the next, few days or so. So that's the thing you got to watch out for, when the selling pressure goes away in the stock. In this industry, EV by EBITDA is normally 20 times, which is there in the healthcare business. 220 crores EBITDA done by the health hospital business, even if you give a growth of 20% for the next 2 years. So that will clearly mean the company will do around 250 crores or 260 crores in the next 2 years. 47%. So even if you give 20 times for this business, so that will be nearly 5,000 crores. So 47% is the stake for this company. So that means 2,500 crores. So nowhere 5,000 crore market cap is justified on a rational basis for this company as of now.
All right.